We've got Andy Bell on desk with us. We've got Brent Thill, who's an analyst at Jefferies that covers the stock with a buy rating. And Tim Regan is a shareholder, managing director, and portfolio manager at Kingwest and Company to help go through all of this. Brent, I want to start with you. The reaction is swift to the downside, even as earnings came in significantly better than expected. What do you chalk the reaction up to?
The stock's up 40% year to date, just 4 months into the year, and there was clearly the best feedback in all the advertising checks. So the expectation bar was higher than where they came in at 27% growth. I think the street was hoping somewhere for high 20s, and so this wasn't a wide miss. It was a narrow miss, but I think you chalk it up to stock had done very well. I think it was everyone's favorite, and everyone was positioned here. So you're probably seeing a little bit of a sell the news relative to the lack of a material upside on revenue. They're doing a great job controlling expenses. Their headcount was down 10% year over year. So I think, as Mark Zuckerberg says, they're growing responsibly and doing the right thing for the bottom line. So that looked fine. It just seems like everyone expected, via the checks, that advertising would be a little bit stronger. Again, I think this is more a game of inches than miles here, and it doesn't seem like there's anything to be super concerned about if you're an investor over the next year.
Yeah, ad impressions increased by 20%. Average price per ad increased by 6%. There's 3.24 billion people, daily active people on their apps. That's like half the planet. You're a shareholder, Tim. Any of this, because it's just maybe a miss by inches, are you flinching at these earnings, the reaction, or are you taking comfort as a shareholder? This is a business doing what it's supposed to do.
Well, not having been able to see their whole presentation or their forward guidance, it's kind of tough to tell. But as Brent said, this is something we look at for the long term, and seeing what we saw, it doesn't knock us off track for the long term. It's up 40% this year. It's down 10, it's still up 30, we'll say. And if you're going to hold it for the next few years, it's doing everything they're promising.
Brent, this has become sort of a go-to name for a number of factors, sticky for all the eyeballs that are in it. But, the questions about, there's some of their ambitions around AI, which Mark Zuckerberg talked about. Is this why, maybe at the margins, investors are increasingly flocking to Meta? What do you want to hear about that on the conference call?
Yeah, I think AI is going to reshape the entire company. If you think about it, small businesses and mid-sized businesses are a huge percentage of the spend, getting into new brands that we don't really know. And how will those brands use AI to create campaigns to find all of us, whether you're a travel company, if you're an apparel company, whatever you sell? And AI is going to let them do that easier and faster with less capital. So you can fire up an AI instance of, maybe you're an apparel company and you sell female clothes, you're doing a sidewalk sale and you have 40% off. Who's bought, who hasn't, who in the audience makes the most sense? That Meta can do that through their AI, not only to find those users, but to actually create the campaign. And these campaigns can cost, a lot of money. And so with AI, they can do that. As a consumer, we all could effectively go in and search the platform. We're looking for a trip to Europe, and we want to find the best spot to stay in France. We can do that, and we're going to be able to search the platform easier. So I think with AI, there's going to be incredible opportunity. You're going to be able to create new content as a consumer. You're going to be able to create professional content as an enterprise. And then when you fast forward a long way out, AI is going to let us have better interactions on this platform. So this is where the metaverse comes in. I think this is so far out, but I do think when you think about what's the next leg of growth here, it's to what you said. They have billions of users on the planet that engage, that love the system every single day, and they don't have to do anything dramatic. They just have to keep going deeper. AI will let them go deeper in those experiences, keep us on the platform, because it is an ad platform, right? And everyone knows this. This is an incredible engagement platform. No other platform on the planet you go to does this system know who you are, what you like, what you're interested in. I've never seen anything like this in my history covering tech. how good they are at the targeting. And because it's ad driven, that's important. And that AI will help advertisers spend more money in the platform. So the better the AI, the more advertisers are going to flock to the platform, the more users are going to be, and that self-reinforces. So we are very bullish about where they sit in AI, and I'm very bullish about what they've done on the cost side. I mean, they're doing all of this with incredible margins, incredible earnings upside. Yeah, everyone want a little more on the top line, but overall, I think they're in a really good spot.
Yeah, Andy, I mean, to hear Brent talk about that vision and that future for this, it makes it miss, on second quarter revenue outlook, which, by the way, in the press conference, they don't highlight any problems. They just said, this is the forecast.
Yeah.
Maybe they're just under promising here.
Yeah, that's right, being conservative. And it's interesting, the CapEx, they are saying now their CapEx could be as much as $40 billion US. I mean, it's interesting, they spend vast amounts on hardware as well. It's not just people in cubicles pecking at keyboards. Just the size of this company, though, I mean, their annual expenses now north of $90 billion. Their revenue up more than 20% in the latest quarter. So that could be a drag. They're also announcing the latest AI chatbot software called Llama 3. Although chatbots, I don't know. I'm dubious, but obviously these guys know more about AI than I do. I can't see getting any satisfaction from a chatbot, but maybe some people will.
I mean, that's actually a good question, because I think they, and Brent, I would love to get your 2 cents on this. The market share for Google since the launch of ChatGPT hasn't changed. Just in my own, I use it sometimes, but I'm still default going to Google. I think we're all still waiting. We talk about AI, it's definitely a thing. It's going to be game changing. When is Facebook the company, is Meta the company that brings it and really is the first to make it touch everybody's life? I mean, ChatGPT was cool. Did it really revolutionize? Not yet. Did it kill Google? Definitely not yet.
Yeah, I mean, as we say, we're in the hype phase of AI. We're not in the revenue phase of AI until late this year into 25. And so we're really excited about what this can do over a period. But I think many of our investors are effectively too over their ski tips and on the impact to revenue. It's going to be pushed out, but we're incredibly excited, and it's going to be phased. Remember, 95% of AI is in what we call POC, a proof of concept. The 5% is in implementation. It's tiny. Big banks, insurance, healthcare companies that are regulated, they can't really use AI yet because of strict data governance rules, including our firm. We're not really implementing it right now because we have data governance things we need to ensure to protect our clients. So I just say we're in a holding pattern. It's going to be a slower adoption path. We talk about the hype curve being above the revenue curve. Those curves have to come and converge. They are starting to do that. But make no mistake, like when you mentioned Llama, this is their open source AI language inside Meta. This could be, if you're a holder of Meta, this could be an incredible business 3 to 5 years down the road. Everyone in the industry I talk to is like, Llama's the best open source engine. It's incredible. I love what it's doing. These companies could license it similar to what Red Hat did for Linux. They licensed Linux via Red Hat as a protective wrapper around the language. Red Hat ultimately sold the company for a lot of money to IBM, made investors a lot of money. I think Meta's with Llama is going to make a lot of investors money over time, and they haven't monetized it yet. And it's not just about a chatbot, and that's one element that can help, but it's going to be a talking nurse, that effectively can follow up on a dentist visit or a dermatology visit. It doesn't really happen today, and if it does, it's not really an amazing experience. So we're starting to see even these virtual nurses to be able to follow up and help the healthcare industry. There's a lot of really interesting applications. I'm really bullish about what Meta can do with it, but we want to idle everyone's expectation in the short term back that none of this is going to be super material in 2024. It's a 25, 26, 27 event. And we think it's going to be very beneficial over a period of time.
Well, Tim, I'd love for you to pick up on that point, because as I've known you, you're not the kind of hopes and dreams investor, right? You're not somebody who buys on speculation. Right. So in the meantime, as they get to that point, they've got a really healthy business until they get to that future.
Well, absolutely. And that's what I was going to say, maybe just reframe it. is today you're actually buying Meta for what it's worth without the AI. It's a free option on the AI in the future. And you're getting a great business at a decent price today with that free option. So if you want to play AI and you're patient, why go into all these little things that are hopes and prayers? If it doesn't work for Meta, it'll still be there in 2 to 3 years and it'll be fine.
Meta under pressure again, even as earnings came in above expectations. The revenue was in line, which was growth of 26%, but the outlook was not as robust as the market was looking for at the midpoint, but really just a slight miss. And so you're seeing a big punishing on that stock. While we were talking, we also got IBM results, and I'd love to go through those right now. IBM earnings coming out in line with expectations on the revenue front. Actually, I'll call it a slight miss. Revenue only increasing by 1%. The market was looking for growth of 2%. The operating earnings were higher, $1.68 versus the market looking for $1.59. But we're seeing the stock under pressure right now. And I think part of it does have to do with that tepid growth. Also, as rumored, it is buying HashiCorp, which is a software company that Bloomberg reported it was going to buy for $35 a share. It is going to buy it for $35 a share. They're going to fund that with available cash on hand. But IBM, it's pulled back recently, off about 8%, but recently hit an 11-year high. This is a stock that kind of awoke from a slumber. And Brent, I'd love to get your thoughts on this as somebody who's really focused on getting investors plugged into the next AI play. Where is it in IBM?
Yeah, I mean, I think it's hidden in IBM. It's going to be found first in the consulting. So anytime you build a house, you got to hire an architect, a consultant. They have great consultants. No one really knows what to do in AI and enterprise. So IBM has a great consulting arm that is helping coming in and saying, do you buy this land? Where do you put the house? How do you want the bathroom oriented? They're great at that. And so they're a great consultant to AI. The second part of this will come in software. So once you build the architecture, again, we're in an architect, planning phase, as I said, in AI, then you'll add the software. And I think right now IBM is not where they want to be. From a software perspective, they definitely are leaning in, trying to be a software first company. Our conversations, Arvind, the CEO, and the rest of the management team, I really like the strategy and the vision. And the first thing you do when you realize you have a problem is admit you have a problem. And I think they realize, we want to be a software company. We don't want to be a low margin consulting company forever. We want to emphasize, software and consulting, but software first. And if you look at the software business, up 6% constant currency, the street was looking for a little bit more, 7-ish%. As you said, on total revenue, they're growing 1%, but 3% up positive constant currency. So, you have a slow moving vessel. It comes down to cash flow. The cash flow was very good at $1.9 billion, maybe a tad light relative to where everyone wanted. But overall, I like the position. I like the strategy. I think the acquisition of Hashi makes sense. They want to be in more infrastructure, multi-cloud story, and this will help them. It wasn't a crazy multiple. Hashi wasn't really executing phenomenally well. So hopefully IBM can get their execution act going again. Really not making any money, only growing 10+%. They got a lot of work to do with Hashi. So my sense is they're probably going to go into the blowtorch and effectively clean out a lot of Hashi and inject it inside the IBM framework and try to run it cleaner and leaner, which they needed to do because investors were obviously not very psyched about the Hashi momentum at this point.
Tim, can you get excited about an IBM?
Well, there's other things to get excited about. Big Blue's been around for ages and ages, and they continue to reinvent themselves. And sometimes, as we like to say, it's not just the company, it's the price you pay for it. So we get excited when things get really cheap.
The reaction is swift after hours, Andy. We are seeing the stock down about 5%, and we're seeing that with Meta as well.
Yeah.
I mean, what a study in contrast this compared to Tesla yesterday.
Oh, yeah.
But of course, the lead into Tesla was weak, whereas the lead into Meta was very strong.
Yeah, the Tesla numbers, actual results were terrible, but people rejoiced to hear, they are going to make small cars after all. One of the factors behind the sell-off in IBM could be weakness in the consulting business. That's been a worry after Accenture disappointed investors as well. They had zero revenue growth, apparently, in the consulting business. That was it was just over $5 billion, unchanged year on year. Also, sales growth at Red Hat, that was 9%. Sounds respectable, but Bloomberg says that this is another relatively slow period for Red Hat, which used to see its sales jump 20% each quarter. So that may be giving investors misgivings right now.
All right. Good roundup on IBM. I'll give the last word to you, Brent, because we are seeing such a pullback in on Meta. You do cover that. You've got to buy. Is this a buy the dips?
Yeah, it is. And I think to kind of dig in further, we didn't have all the numbers, but their capex guide at 35 to 40 billion is materially higher than the 30 to 37 range. So they did bring up the low end, high end of capex, and that's to spend on AI. So as I go back to, they're building these roadmaps for AI.
And are you fine with that? Because remember, the spending was a problem a year ago.
We are. I'm fine with it because here's the thing. There's only going to be a handful of AI winners. It's the companies with users, data, and capital. And it's called Amazon, Microsoft, Meta, Microsoft. I mean, there are just a few that are NVIDIA, obviously. I'm not the semi-analyst, but you look at, there's just going to be a few that really have the ability to play the AI game in a big way. And so our view is it'll be a fewer, narrow list of stories, and I think Meta will be that one. So I'm fine. And guess what? Microsoft's doing this, everyone else in tech, but we have a clean sweep of tech being down from Meta to ServiceNow to IBM. Everyone's down. So not a great way to kick off tech earnings season. In Q1, we've already had kind of a negative overhang on the group.
You're right. And do you think that this could paint maybe an even weaker setup for tech stocks? Are you worried about, some of the other earnings that we might get as a result? Not maybe the actual earnings, but the reaction, Brent.
Yeah, I think we're living in a world where the expectations are higher than the reality, and that doesn't bode well short term. So what I've said is, being a software analyst, I feel like right now it's the worst sentiment I've seen in my group for a year and a half. No one wants to be in my group. Everyone wants to be in the all the AI action is in the enabling infrastructure. So Dell, NVIDIA, AMD, all those names. And so right now, we're just sitting and waiting because the AI revolution has not come to applications in the software world. That will happen later in the year and early next year. So I think right now everyone's just sitting on the sidelines waiting it out. And when you see basically three big names that people care about down between 5 and 10%, it's the after hours, it's the Wild West. But I'd say that, at this point, it definitely didn't get off to the start that we would have liked to have seen. And many of our clients were just waiting until mid-year to kind of flush all this out to come back to the group. So my sense is this is just more further, bad overhang and sentiment on our group, and it gives most of our investors pause to say, well, maybe I can wait another quarter or two before I really become more aggressive buying this dip. But I do think it's a buy the dip because sentiment is the worst I've seen in the last year and a half to 2 years.